Hi everyone, this is Rob Roy of LA Wave Options and welcome to TradeFinder Live. If you're new with us this week, let me give you a brief rundown on how things work. First of all, if you haven't seen any of our LA Wave Options webinars, this is our disclosure slash disclaimer. So I guess I'll just make up a new word and call it a disclaimer. But it is important. All kidding aside, so please take a screenshot of it, read it in detail in your leisure. The two most important things that the powers that be want us to make you aware of is, number one, we are not licensed to give individual investment advice in the United States. And second thing is, because we have a lot of international viewers, we have a lot of international subscribers. In fact, I'm blown away with parts of the world that we have people that subscribe. But because of that, prices that we discuss are assumed to be in US dollars unless noted otherwise. So the process works is that I'll go through, talk about the market a little bit, then we'll go through and we'll review any case studies that we may have closed for our subscribers, give you an idea of how that works. So we'll look at our website. We have a new thing for our subscribers, so I wanted to make you guys aware of that as well. So we'll go through that process. Then we'll look at our case studies from previous TradeFinder webinars, and then we'll go through and look for a new case study consideration for this week. We look at a new one each and every week. And then at the very end, which has become quite popular, we'll open it up for you guys to ask for your favorite stock symbols that you want us to look at based on our technical indicators and Elliott wave. And we'll wrap this all up in about an hour's time. So that's how this whole process works. So one last thing on the questions. If you have a question throughout the process, please go ahead and post it in the Q&A as we go. We do have support on that can answer anything that may be from an admin type thing. And if it's a question for me specifically, or if it's a symbol that you want to look at, I'll do that at the very end. So I don't want you to think I'm ignoring you. Well, I guess I kind of am, but if I start looking at things in between, I lose my train of thought. So we'll get to all the questions and the stock symbols at the very end. All right, so with that, let's take a look at the market. Boy, lots happened since we talked last week. Last week at this time, we had the Georgia runoffs that were going on, and was watching the futures. The futures were up and down. And as you know by now, the Democrats won both of those two runoff seats. And a question that may have come to mind, because we've talked about historically how the market has not performed as well when one party has controlled the presidency, the House, and the Senate. Why didn't the market move to the downside? A lot of people expected the market to move to the downside immediately upon the results of those two runoffs. And in the last video, if you haven't watched the last SPY video, please do, where I go into more detail than I will here, because we've got a lot of other things to cover here. My comment was, wait for it. We have to remember now is, because there's a blue sweep, if you will, technically the Democrats control the Senate, even though it's a 50-50 split. If there's a tie and everybody votes down party lines, the tiebreaker is the vice president. Vice president's Democrat. So technically we have the Democrats in control of everything. But the other side of that is the stimulus package is going to be a lot larger now than it would have been if the Republicans maintained control of the Senate. And I don't get involved in preaching politics here. My political views are immaterial, doesn't matter. I don't care what yours are. You shouldn't care what mine are. You should care what your own are. And the only time that I talk politics is what the political environment affects the markets. That's it. Not my own personal views, none of that stuff. So I'm not going to get into the Washington stuff, and we're not going to cover any of that kind of stuff. That's not what we're here for. We're here to trade and to look at how things affect the market. And that's where I keep things from a political standpoint. So we hit the 381 on Friday. How long have we been talking about it? You see me draw this zigzag pattern, I don't know how many times, but Elliott wave came through again and absolutely dead spot on that 381 level. In fact, on Friday, we closed right at 381. Friday's close was 381.26. So boom. smack dead on, spot on, as they say down under, hit our target exactly, and we've gone sideways since then. So, I mean, how impressive is that Elliott Wave nailed this absolutely to the point, and we've just kind of gone sideways since that point. So what happens now? Where do we go from here? Well, there's two different paths, obviously. Well, I guess we could go sideways. I don't think that's going to happen. We could move up towards this 161.8% level, which is 420. And boy, talking about that, there's been a lot of fun comments on YouTube regarding the connotation of 420. But we'll let that go. If you're understanding what I mean, then get a little chuckle out of that. The second thing is we could correct. And if we correct, what we want to watch is this 61.8% level, which is not only the previous fib extension level, but also happens to be the height of this A wave here on the first part of the zigzag. So that would act as two different points of support, the A wave high as well as the 61.8% fib extension. And if we were to break that, then it could get a little bit ugly. But what I was talking about as far as the thing we have to consider with the fact that we have the Democrats in control of everything, with that stimulus being so much higher, 2.5 times instead of a $600 stimulus check, we're going to get $2,000. So people that already got the $600 are going to get another $1,400. That's a lot. It's a lot of money that's going to be coming in. And statistics have shown that a lot of people took the previous stimulus check, the $1,200 that they got the first time, and they opened trading accounts. They did all the Robinhood stuff and all, and you know, hopefully they haven't lost it all, but it opened up a lot of people that have started trading because they're sitting at home, they had nothing else to do. And you have all that money now, so almost double what was the first time, likely going to move into the markets. That could be a catalyst to move us, as hard as it would be to believe with everything that's going on in the world. I mean, I know I heard about the virus, all this stuff. We hear all that stuff, but we're looking at charts, and the charts say that's a possibility. And when you think of the fundamental standpoint with all that stimulus money coming in, it's not out of the realm of possibility that we break through this level and move higher. Now, today we have a really nice doji on the chart. We closed at 378.89, or excuse me, we opened at 378.89. We closed at 378.77. That's about as perfect of a doji as you can get. So likely we're going to know some things tomorrow as far as, do we start to move to the upside or do we correct back down? But I just wanted to give you those two key levels to look at. So if we break to the upside, we're watching for 420. If we break to the downside, we're looking for 358. And that's why for our subscribers, we told them we were going to do this throughout the month of December, expecting that Elliott Wave was going to be right, expecting this was going to be a point of contention, and something significant was going to happen from here, either a further move to the upside or a move lower. We loaded up on strangles in our volatility portfolio. I believe that by the time January is done, it's going to look like a pretty volatile month. And we've gone sideways for a few days here. I don't think that's going to last much longer. And I think over the next couple of weeks, we're going to see some significant moves. And we're already starting to see our strangles are moving to the point of profitability, even with the market not doing a whole lot. Last thing is I wanted to show you, and this was on the recording as well, the IWM, because we talked about 2 recordings ago, the January effect, where part of the January effect is that small caps outperform, not short caps, small caps outperform the regular market. And there you go. We had shown this part before. Another big update today, new all-time high in the Russell 2000, which is the small cap index. So there you go. Everything that we talked about has come to fruition, at least so far. So there's not much else to talk about as far as where the market can go from here. So with that, I'm going to move and show you something brand new that I was really surprised, and I've been blown away by the number of subscribers that have participated in this. Part of what we do at Elliott Wave Options is we limit risk. So we buy options. We're not sellers of options, because even if you create a credit spread you're risking more than you can make. If you sell naked options, you're taking significant, if not unlimited risk. We don't do any of those things. So we're more on the buy side where we can limit the risk for each individual alert that we send out. And we keep that at around $500. Well, there's been a lot of stocks now based on what's happened over the past few years that are just out of reach of being able to give yourself a reasonable delta to make money on and put on a trade that stays within the $500. So we created, based on our subscribers ask for this, we created what's known as our high value portfolio, which all that really means is that we put on positions that exceed the previous $500 cap. So there really isn't a cap limit on this. Basically, we're going to put the trade on that gives us the best chance to make money. So before, if there was a trade that gave us the best chance to make money, but it exceeded $500, we passed. We didn't publish that. We didn't send that out as alerts to our subscribers. That has nothing to do with what we're doing in our own portfolios, but we didn't send those out as alerts. Well, now we can with the high value. And just to give you an idea of one of the results that we've had, here's one we did on Tesla. We've talked about Tesla forever. And this was actually a strangle. This isn't even a directional trade to show you the money that was made on this. So the entry was on November 13th. We don't have a significant track record here on this because we just started doing the alerts recently because of the requests. And I'm going to take the blame for, I didn't realize the demand for this was as high as it is. So again, so many of our subscribers have jumped on to this that I've been pretty shocked. But you look at this triangle, we've shown this before. You guys always ask about Tesla. You know what that triangle was. And it broke out, obviously, as you already know, pretty vertically. So you get to the point where you get the vertical breakout and you can see, you know what I'm about to say. If you've watched any of this before, we were overbought. There you go. Too far away from that 10-day moving average because, say it with me, no security in any time frame gets very far away from the 10-day moving average. You learn nothing else from watching these Elliott Wave option webinars. Hopefully that's helpful. Many people have said that just that one tip has been helpful to them in their own trading. And so it's time to go ahead and take the gains. This is the opposite side of the fact when you put on a larger trade. So you can see it was $2,750 to put that on. So that's quite a bit more than $500, $2,700 to put the trade on. But look what the gain was. Closed it out at 106. So close it out for $10,600, which generated $7,850 gain, 285%. So that's the opposite thing that can occur with having on larger positions. So it's all risk reward, right? All trading is risk reward. If you're taking on more risk, you can generate more reward. And that's what the high value does, is it allows us to exceed the $500 cap for those folks that choose to sign up for the high value portfolio. And it's not just for the volatility, it's going to be for the impulse as well. If we find directional trades that exceed the $500, and that's where we want to be from a trade standpoint, then we'll be utilizing that for the impulse portfolio as well. So pretty neat new aspect of it, and I'm excited because I just was surprised at the number of people that that were interested in this. All right, so now let's go back and look at our case study considerations from the TradeFinder over the past couple of weeks. We went back, let's just continue with Nike. This is going back now to December 8th. But we had talked about last week, when we were here last week, we were right here. And we said, you know, we had this big move to the upside. And I said that when you see a bar like that, you usually trade there. And we closed almost to that point. So if you didn't get out on this move and you're still following this, then you've had another opportunity basically over the past 3 trading days to get out almost at that high. So if you're not out by now, perhaps you need to take a look at the fact that you might be getting just a touch greedy. Greedy is never a very good thing in the world of trading. So here's Truist. We sent this one out as an alert to our subscribers. We are still in it. We have not sent out the closing alert yet. So we had this nice symmetrical triangle, looked like we're breaking to the downside, came back up, tested it. Now we've exploded a nice update today. We want to see if we could get a follow through day to that move to the upside today. If we do, we may take this off tomorrow. But I showed in that SPY update how the 210 yield spread has exploded to the upside. That allows financials to make money. We can get to the point where the rising interest rates can become an issue. But for now, it's not to that point. We're still low on where interest rates are. We'll see how that plays out in the weeks and months ahead. But for now, it's good because remember, banks borrow short term, they lend longer term. They make the money in the spread. That's how financials make money. So this is good for them. And we'll see if we get another bit of follow through, but a really nice breakout on that TFC that we used as a case study consideration back on December 8th. So looking at the 15th, last week we looked at these and they really hadn't done a whole lot. So let's take a look and see where we are now. FNW Franco Nevada still just generating that larger triangle. This happens sometimes. It's really frustrating because it takes longer for the stock to break out, but all it's doing is forming a better and larger triangle. And usually the patience, you've probably heard me say this before, usually the patience when a larger triangle is being formed is rewarded, because when it takes longer and it's a larger triangle, usually the breakout's a bit more volatile. So it hasn't done anything yet, but it certainly looks like it's getting a larger and better setup. MKC, MKC, McCormick was also a strangle that we looked at back on the 15th. And maybe we're trying to take a look at the downside. It's 2 days in a row. Can't call that a breakout because it's really just 1 day of trying to sneak out of the lower end. So whether you want to draw it from there or all the way back here, you can see the triangle. And a little bit surprising to see this one move, but we have to have that follow through day. So again, with the triangles, whether you're breaking a major moving average, strong support or resistance area, you need a second day because the market gives you head fakes. So you need a follow through or confirmation day. But today doesn't mean anything. If we break down again tomorrow, then maybe we're getting a downside breakout out of this one. So hopefully by next week, we'll see something a little bit more to look at there. So last week we looked at these two. We looked at ACGL, which was Arch Capital. And you can see that we moved to the upside a bit here. Last week on the 5th, we were here with the doji. So we had the doji and then boom, big up day the next day. And we've gone sideways since then. Talked about this as far as triangles, and Elliott talked about this a lot in his works. And you've heard me say it if you've listened in before, that we always get focused on the big triangles for our triangles, etc. But Elliott talked about the fact that smaller triangles show up everywhere, that they're prevalent out there. And there's one. That's a smaller triangle that's being formed. So we had the big up day that occurred back on the 6th. So the next day after we met last week. And then we've consolidated that move into a smaller triangle, which means that we're about to get another move a la what happened on the 6th. So we'll see how that plays out. Obviously, we'll look at this again next week. And then one that has had a nice move, we did send this one out as an alert to our subscribers on Workhorse. And you can see, boom, really nice move to the upside. So here's where we were last week, right here. And you can see it looked like we were starting to move off of this area of long-term support with this pretty nice descending triangle. And then boom, boom, boom. We moved to the upside. We've come back down a little bit. We are still in this. We have not sent out a closing alert yet. And here's one of the reasons why. There's that 10-day moving average again. So let's go back a few days. And there's the separation. All right, so had a couple breakout days, but we're overbought from the 10-day moving average. So having it come back down and tapping the 10-day moving average, which it did on the low today, move back to the upside, is really common in breakouts where you break out, you test, and then you keep going. This is why I know a lot of people really like the vertical moves. This is why I don't like the vertical moves. This kind of thing can happen. So we'll see if we continue back to the upside, which is what I expect. Wanted to give this the opportunity to break to new highs, because if it can break out of this area of resistance here, then it's unlimited as far as basically where the stock can go. So we wanted to give it that opportunity. Now, the DMI just is breaking above that lower negative directional indicator, but you can see it has not broken above 20 yet. But the fact that the ADX is still going up, we did have a little bit of a kick up in the negative directional indicator and a kick down in the positive directional indicator. That's not exactly what you want, but we've had 3 days of basically sideways to slightly down move. So it's not unexpected, because remember, the two directional indicators are very responsive to the day-to-day moves in the market. If the stock jumps back to the upside, those two will reverse and go back up quickly. But what we want is that ADX to continue up and break above 20. If the ADX will continue higher and break above 20, and we can break out of here, then that could be one of those home run type of strangles. We don't get a whole lot of home run strangles. We get a few sprinkled in throughout the year, but it doesn't take many to make your year. Usually we're looking for 30 to 70% gain in our regular strangles. That's where the profit percentage tends to run. It takes about 30 days, make 30 to 70%, still pretty good return for a month. That's the general way that those move. But if we sprinkle in a few of those home run trades, it makes for a pretty nice year. So we'll see if that's what we get out of this one. Again, there's nothing there that's saying like, oh, we should have got out. At this point in time, it looks like we can move back to the upside. And the other thing is that this stock really moves. So, there's triangles everywhere. We talked about this last week. We had the triangle here, and then it broke out. And then we got the triangle here after. Well, here's the triangle. So we had here, tested it, boom, broke out, came back down, moved to the upside, break out again. This is one of those stocks that consolidates and breaks out and consolidates and breaks out. So that one looks pretty good. So I feel like we're going to continue in the upward move. But even if we don't, and it breaks to the downside, that's okay. That's why you don't rush to take off the other side. So just to be clear for our subscribers, being as transparent as we can be, we haven't done anything. Sorry, we didn't take the calls off. We haven't taken the puts off. We still have the original position as we're waiting to see which way we move from here. You want to really make sure that you've got a confirmed upward breakout and it's continuing before you take the opposite leg off, because things can reverse quickly, especially when you're dealing with a stock as volatile as this one. But it was a great looking pattern. It's made a nice move, and expect that volatility to continue. If you're curious, I should have mentioned the futures when I was looking at the market because of that doji that we had today. See if the futures are giving us any indication. They're up 5.5, so nothing going on in the futures to give us an indication which way we move tomorrow from that doji. All right, so let's go ahead and look at some potential case studies for this week. And for those of you that may be new with us, the software program that I'm utilizing here is ProfitSource. You can find out more information at ProfitSource.com. And for our subscribers at Elliott Wave Options that have ProfitSource, we have included the searches that I utilize on a day-to-day basis to go through and find alert candidates. So anything that says EWO is one of the searches that I utilize. So under Elliott Wave options, what they also did at ProfitSource is they added some other Elliott Wave type searches that you can use to combine either with your own indicators, if you have some that you like, or you can combine them with the indicators and the searches that we use already. In other words, if we look at the Elliott Wave option bullish impulse stocks, and I click there, you can see there's 5 results here. So we have Texas Roadhouse, ANSYS, General Dynamics. A little bit of a surprise to see that one there. Floor Decor, that kind of makes sense with the way the housing market's been going, and Tractor Supply, which is one that commonly shows up for whatever reason on Elliott Wave searches. So that gives us 5 directional candidates to look at. But my preference is I like to find stocks that are in some sort of a zigzag pattern or following our indicators in a wave 3. So now we can have this bullish wave 3, put check mark there, and basically what it will do is go through and combine the bullish search with the wave 3. So you can see there's 5 results in our bullish impulse stocks. There's 685 stocks that are currently in a bullish wave 3 from an Elliott Wave standpoint. Now we can find out how many of the stocks, the 5 stocks, if any, that showed up with our set of confirming indicators are currently in a wave 3. And there's one, FND, the floor decor that I was talking about, which again makes sense because of the housing market being super strong. KB Homes, symbol KBH, which we have a strangle on for our subscribers, reported earnings after hours today, and they blew it away and said things still look good in the housing market. We'll see how long that, usually when we start to get a little tick up in interest rates, what tends to happen is you get a surge because people are like, all right, rates are going up. They're not going to go down any further. We got to go now. And you get a surge in the housing market, and then that tends to be it. If interest rates are going to indeed continue to the upside. Now you can see here, here's a zigzag right here. It looks like, let's see. Looks like we started an impulse here, and 35% is pretty close to 38.2. And so we're up at the 38.2% extension. But look, we cleared the A wave high today on the wave 3. So we should be heading up here to 110. We're trading at 103. I don't think I've ever traded this in 25 years. I don't think I've traded this stock. It's a new symbol to me, so I have no idea if there's any liquidity in the options or not. Let's see. Little bit in January, February, out to April. There's enough, surprisingly. I mean, it's not great. It's not super liquid, but there's some. Spreads are a touch wide. There's an April 31 Delta call that it's over, it's $1.10. It's 370 by 480. So that's a bit expensive for a 31 Delta. And it's 163 contracts of open interest right now. So that might be a little bit expensive. Let's go down to a 31 Delta and it costs that much. But it does look pretty strong. The ADX had a nice move, and you know that I like on these corrective moves if the ADX would make it back under 20 before it moves back to the upside. Those just tend to be stronger signals. It didn't do that. There is still separation between the 2 directional indicators. The ADX is moving up. I don't know if I love this one or not. I mean, it looks like a pretty good pattern. We're at, call it 104, 103.98. I think the move to 110 looks pretty good after that. I don't know how far we can go from there. So it's okay, but let's look around and see if we can't find something maybe a little bit better. But that would be a directional candidate. And then we go back here to our pre-computed scans. And in the corrective search, there's 0, no results. So nothing is correcting. So not even anything to look at there. So let's click these two off. There's 85 consolidating stocks, so that's gone down. If you've been watching these recently, you know that for quite a while we were above 100 in our results. So we started back at like 73 and slowly worked up as we moved into the end of the year. And we got well above 100. Now we're drifting back down. So it shows you that there's been some movement. And when you look at that, you're like, I don't want to look at 85 charts. Well, you don't necessarily have to. I do, but you don't necessarily have to. So the other thing that I like to do is say, all right, how many stocks are consolidating, forming some sort of a triangle in the wave 3? So let's take a look. And there's 4. Well, 2 of them are the S&P, the mega caps. Yeah, I've heard that they were going sideways. And then technology. That might be interesting. So let's look at the XLK. Technology has had a bit of a rough go since the beginning of the year. And you can see that starting, we have not made a new high in the technology sector. That's not the greatest triangle formation. It is consolidating. It's going sideways, though. It's not really forming any sort of a significant triangle. You've got the ADX that's moving down. That's nice. That looks good. And the negative directional indicator is actually taking the lead here, but I don't put a lot of weight in that when you have the ADX is moving lower. I don't pay as much attention to the directional indicators then. Also, we have area of resistance here. We did break above the highs back from early September, but we've been consolidating this move here. So I think this one would probably be better suited to wait and see which way we break from here. If we break to new highs, then you trade it up towards this wave 5 high target of around 138. And if we break to the downside, then we look to create this wave 4. So your target would be around 122 or so. So I think that makes more sense. It's a little bit more of a prudent thing to do on this one rather than create a triangle out of it, which is what I was hoping that we could do. So I don't know about MGK. Let's see what that one looks like. Pretty similar. Very similar, actually. So it shows you, I mean, everybody knows that it's been the big tech stocks that have been driving the market, right? So the XLK and the Vanguard mega cap, the technology ETF and the mega cap one are very similar charts because the mega caps are the tech stocks. So they're kind of one and the same. So there really isn't any difference there. So there's no reason to look at that. And then the other two are just S&P stuff, and we could do the SPY if we wanted to. So don't see anything there. We haven't done anything in a bearish wave 3. There's now 38 in there. Let's see, just for the heck of it, if anything shows up. Maybe not, but no, there's nothing. And that is normal, by the way, because we know that when stocks move to the downside, especially when you're moving to the downside in a wave 3, that's the strongest of all waves, right? So you usually don't get much of a consolidation on the way down. It's just a shot in the dark, not expecting to get any results. Pretty normal that you don't see consolidating triangles in a wave 3 to the downside. That's why we like trading the downside, right? Because we know stocks move down faster than they move up. So that's not unexpected at all. It's just a curiosity to take a look and see what we could find. So in order to save time from looking at 85 stocks, let's look at the stocks that have the ADX that is moving up. Sometimes that ADX starts to sneak up before the stock breaks out and can give you an idea of, all right, since the ADX has stopped going down, we've stopped consolidating. Does that make sense? So we use the ADX going down to show us that the stock's consolidating. So if it comes down and then starts to turn back to the upside, okay, well, it's stopped consolidating and maybe getting ready to move to the upside. So if you can find one where the ADX is ticking up, we've had a little bit of success with this. With our alerts for our subscribers, you can catch it maybe before it breaks out. So there's a few to look at here, more than I would have expected. Let's go down and see energy. Let's take a look at energy, just because we know energy's been doing well. So let's look here at EVRG. Duke Energy I've traded before. I don't think I've traded, I don't know if I've traded this one. Let's see, EVRG. Yeah, that's no good. So there's no options. The spreads are ridiculous, 0 to 380, stuff like that. So forget that one. Nothing you can do with that. But Duke Energy, traded in the past. This is fairly liquid, and yeah, the spreads are tight. Not that expensive. See what Duke looks like. So this one's a possibility here. We tried to sneak out to the downside today. Look at that. So here's one area of support. You can also call it up here. And look, we tried to test, but regardless, we tested the low today, and we could actually move this back to this area here. Previous highs are around 105. So with that, you've got a pretty nice descending triangle here. And these options are not that expensive. They're really not. Surprising to see anything in energy moving down like that, considering what's been happening in the energy sector. So that's a bit surprising. Let's see what the deltas, if they match up for a triangle. They do. Yeah. So that looks out to April, 94 days to expiration. The bottom part of the triangle is trading at the lows, call it 87. And the high was 98. So 12 points times 0.8, 9 points. And we're at an $88 stock. So the potential movement's 10%. So that one looks pretty good. So I think that we tried to find something directional. We really couldn't. So I think we're going to do this one, Duke, as a April strangle as our case study consideration for this week. I mean, if we could have found something decent to the upside, with the fact that all that stimulus money could move the market to the upside, be willing to take a shot at it, but we didn't. There wasn't anything. So that's going to be our case study consideration this week. In order to save time, obviously there's plenty of them that we could have looked at, but I think there's McCormick still on there. Just hasn't broken out yet. There's some REITs on there. I don't trade REITs. They don't move enough for me. Home builders, Sherwin-Williams, those sectors make sense. So anyway, I think that's a pretty good one. So with that, I'll go ahead and open it up to questions. Mike, I am doing well. Thank you. And I hope you are as well. So AMD, either a lot of you are trading the same stocks or you get the same questions in. But we look at this one a lot. We know that they've been kicking Intel. Well, I wonder what Intel, we said we're going to take a look and see. I'll come back to this one, I promise. But when we talked about this, all the negative stuff that's been in the media about them, and kind of came close to closing that gap, went down, trying to move to the upside. And if Intel can break above this 55 level, then you probably have a move back in here to 62. So that was kind of on a watch list thing that we've been talking about. You guys quite often give me, by some of the symbols that you want to look at, watch list capabilities. So that was one. So all right, so back to AMD. Tried to break out above this wave 3 yesterday and couldn't do it. Settled back down again today. Obviously the key is we need to close above this wave 3 high here. and it didn't. It tried yesterday. It traded above it, but it couldn't close above it. And that high is 97. So we need a 98 close or above. If we get that, then we're very likely coming to this 105 target, if not higher. The DMI is setting up. There's the barely, but it's breaking above 20 today. I think that, let's see what the moving average is. It wasn't really overbought. It was gathering itself, but the DMI is suggesting that there's enough strength for AMD to break above this, which would give it a 105 target price, if not higher. So that looks pretty good. Pankaj, you want to look at ARKK? When we traded ARKW once. So there's that vertical stuff that I don't like. Pankaj, you are really good at picking the vertical move stocks. I hope you catch all these vertical moves, because if so, you're doing great. So we got this vertical move here, and we came back down to test it. We got above that 10-day moving average. So even in the short term, when you go vertically, you tend to have to come back down a little bit. That's why I like this stuff better. I like that look better, but this stock looks pretty strong. I wish I would like to see it. You probably don't want to hear this, Pankaj, because if you're long this, but I would like to see that consolidation here a little bit right in this area. Let that ADX come down a little bit more before it tries to make another run, but it may not. It may take off, because you can see it's been on one heck of a run. Here's what I'm talking about. See, this stuff was last. When you move like that, there are little tiny corrections here along the way. But when you go vertical, then you, boom, you come right back down, like Bitcoin did. Back to the upside a bit today, but pretty rough day yesterday because it got too vertical. We talked about that in the SPY market update. We talked about Bitcoin. I said, I don't like that vertical move. Well, that's what happened. It came back down yesterday, bounced today. I think it's going to kind of calm itself a bit and then probably make another run higher. So if you want to look at that one, those are my thoughts on Bitcoin. But again, podcast, some consolidation right here and get ready for another run higher. It looks like it could go higher from here. XLE, USO, we've been talking about. Oil's been on a tear, which is not good, right? Because we know we're going to fill that at the pump when we go to fill our gas tanks. So XLE is breaking out. There's my, what do I call this? If you've been paying attention, the launch pad effect, right? When it just goes dead sideways like that for a while, quite often stock blasts off. That's why it's called the launch pad effect. When you get just sideways consolidation, usually boom, moves to the upside. So it broke up above this high here. Nice move. Let's see if we're getting a little, tiny bit overbought, maybe not a whole lot. Look at that. DMI looks good. This one wasn't in a 5-wave pattern, which is why it didn't show up on the searches, but that could have been a good directional trade there. That looks really good as far as continuing to move to the upside. Let's see if there's a zigzag here so that we can qualify it. And the reason I want to see a zigzag is I want to have an idea where it's going to go. 38%, how about that? All right, well, with a 38% correction, your Elliott wave, or excuse me, Fibonacci corrective level there, then the target comes to 61.8. It's not too far away. So 45 is the first level. And I mean, if you're long this, I'm rooting for you. I want you to make a bunch of money. But from, I've got a car that guzzles gas, so I'm not a fan of high prices at the pump. So I'm kind of hoping that the whole energy and USO thing settles down a little bit, because it just costs me more every time I fill up, and I've got a lead foot anyway. So, driving fast cars is fun. But moving to the upside here, it looks really good. Maybe some resistance at the 61.8, but then you know what happens, right? Same thing that happens where we're in the market right now. When you hit the first price target, then you want to see, is it going to be an extended wave 5 or extended move here in the case of an extended C wave in the zigzag, or is that it? And that's where we rely on our confirming indicators to tell us, what does it look like? Does it look like there's still strength? Like the likelihood is that we're going to move to an extended level, or does it look like that's it? It's out of gas, and the likelihood is that we're going to correct. Looking at USO, we've been looking at this with our insiders meeting that we do for our subscribers, and still moving to the upside here. Heck of a move there in USO. We've talked about that for a few weeks now in the insiders meeting. Nice break to the upside. Maybe a tiny bit vertical here. Maybe starting to look at thinking of, all right, this has been a heck of a move for USO. Maybe you want to consider taking a few profits here because you're getting a little bit away from the 10-day moving average. You're going a little vertical for something like USO. That's a really impressive move. The DMI is like, yeah, there could be a little more. We're not quite to 40 yet. We're getting there, but we're not quite to 40 yet. But yikes, I want to see this calm down a little bit for me. But for you guys, if you're in it, then you might get a little bit more. Maybe it needs to go sideways a little bit first, because for a $30 stock, that's getting a little separated, especially for something like USO. But man, we've been all over this move. We've been talking about it for a while. Ken, one of our subscribers, brought this up weeks ago and absolutely nailed that one. Zoom. Maybe we're starting to look a little bit interesting here on Zoom again. There you go. It took a while. When you hear me talking about these gaps all the time, look at that. That's why I say it all the time. Gaps get filled. We don't know when, but they do. It took a while. It took a number of months. Sometimes they get filled quick. Sometimes it takes a while. But what do the options look like on this? I don't know where the ADX must not be down because it's not showing up on the, no, it's too high. But man, is that a good looking triangle. Wow. It's rare. You know, you never say never, right? You just don't say never. One of the criteria when we send out our strangles is we want that kind of triangle, but we want the low ADX. Why do we want the low ADX? Because the enemy of the strangle is not moving. Time ticks away because we're long a call, we're long a put, time ticks away, and that hurts us. And the longer it takes to break out, you know, the more frustrating it is, the more we see the account move to the downside, all those things that we don't like, even though we know that it's going to do that until it breaks out. That's the nature of the beast. That's how it works. But when you have a higher ADX, then there's a chance that this could be forming a larger triangle. It still happens even with a low ADX because the ADX could go to 0, right? And we're looking at it when it breaks under 13. But you can't go too much lower than that in your criteria or you're just going to miss them all. So that's the reason that we tend to shy away from a higher ADX. It's not that they don't break out. They do. Triangles break out, period. Triangles break out. It's not triangles with a low ADX break out. Triangles break out. What we're trying to do is limit that waiting and the patience that we need for it to break out as much as possible. That's why we like the low ADX. But it doesn't mean when you have a pattern that's that good that it isn't going to break out. That's expensive. This could be in our, you may actually see this come out in our high value portfolio because it's going to be way too expensive for $500 of risk. But oh, and it's got March options too. And as volatile as that thing is, gosh, it's expensive. Yeah, there is no way you could do it on a regular basis. The spreads are not that wide for such an expensive stock, and for options that are pricey, spread is not that. It looks, this is really good. Thanks, Pankaj. That's a really good one. Yeah, probably again, our subscribers are probably going to see that tomorrow. That looks fantastic. Close that gap. Looks really good. KBH, yeah, Jeff, I don't know. You sent that in earlier, so I did mention that KBH reported earnings tonight. They blew them away. Stock was up $1.50, so it looks like maybe it's going to be an upside breakout on that. Mike, I'm going to have to do some analysis on that because the options are, I mean, the spreads are tight. They're a little higher. There's plenty of open interest. I just want to go through and find out where's the best delta for the dollar, et cetera. And I don't want to do all that because we're running out of time. I want to get to some more of the symbols. That's a possibility, what you suggested. But I don't want to say, yeah, that's a go. It's going to take me a little bit of time to go through what I do. I mean, it doesn't mean that I'm always right. Obviously, I'm not always right, but to do what I would do to find it. Craig, yeah, the SPY could pull back at any time, right? It's satisfied this long. We've been talking about this for how many months have we been talking about 381? It absolutely could come back down to 359. Not a question. It could do that, and it could start tomorrow with this doji. There's no doubt about it. And maybe it needs to do that to head fake people out. I'm just saying that we have to take into account the amount of stimulus that's going to be kicked into the market and what that did before. Some are estimating that the effect to the economy is going to be $3 to $4 trillion from all aspects of the stimulus. Because remember, it's not just the checks that are going out. There's a new PPP program. All kind of things are coming out now with the new stimulus. So it's very widespread, and it's far greater than it would have been had the Republicans won those, at least one of those seats in Georgia. So we have to take that into account, which means that, again, it's really hard to pick a direction right now. We want the market to do it. Tell us, market, we're listening. Listen to the market. Let it tell us. But could it go back down there? Absolutely could. No doubt it could. Yeah, no, Michael, that's why it's in the high value, because it violates the money management rules. That's why it has its own category. I mean, you're right, but that's why. GD, General Dynamics, you wanted to see that one was on a search, right? So I just don't see anything there that it doesn't move a whole lot. It's not in a 5-wave pattern. I just don't see anything that looks super serious. All right, I'll look at Tractor Supply because that one's been on there for 2 days. It's unusual when a stock's on there for more than 1 day. And that's because all of the factors have to line up. So to get them to line up day after day, when you have several criteria in the search, that doesn't usually happen. I looked at this one earlier today. This was a candidate to send out as an alert because it was on the search, and you can see why. It looks like maybe we're building a really nice DMI. Want to see that? See, here's one thing I like. The positive directional indicator came down today when the stock went up. Don't want to see that. You want to see that widen between the two directional indicators. And the other thing is that we're just nearing such a major point of resistance. It just wasn't prudent to do it now. Let's let it get a little higher. Let's see what it does at 155 when we run into this resistance from August and October. Let's see what the DMI looks like then, see if the two directional indicators separate more. Then maybe at that point in time, we look at doing something, but it just wasn't quite there with everything set up. But it's interesting. So with TSCO, if you're keeping a watch list as I do, make a note. 155 is the key there. If it can break through that, then it's gone. It's off to the races. APHA. Angel I'm not sure how you pronounce your name, but that's another. This is interesting because what do you see there? Hopefully you see that zigzag pattern and that you're starting to see these without me drawing them for you. But wow, 50%. You know, it's not a big move from a dollar standpoint because it's at 9 now. It looks like it's a pretty good move. I guess it is because it's going to go close to 11. Feel pretty confident in that. That DMI. Here's the issue, right? Now, when I talk about this, and you know I talk about it a lot, no security in any time frame gets very far away from its 10-day moving average. Stocks can get overbought or oversold for a period of time. It's not a long period of time. But is that it today? Do we go up one more day tomorrow before it comes down? It ain't going to go straight up much further before it comes back to talk to the 10-day moving average. I can tell you that, but I can't tell you that it comes back tomorrow or the day after. But we already tested. See, we broke up here and couldn't close above the wave 3 high, gathered itself, got back towards the 10-day moving average, broke above it yesterday, continued the climb today. It could go again tomorrow, or it could settle in here and maybe test the top of it now that it finally got through it. It bumped its head against it. Now maybe it actually is going to test it to see is it good support now. That looks really good, though. Are there options on this? I just don't know if it gets there tomorrow or if it gets there over a week or so, but looks pretty darn, yeah, there's options and they're super liquid. Man, that's crazy. But I'm gonna put that one on the watch list too. The 11 looks very much in the cards there. That looks really good. Yeah, David, TSCO is a directional trade if it breaks above that area. Zoom we looked at. Thoughts on SQ? Well, I was going to show you QS because this is an illustration of why I don't like vertical moves. There you go. Case in point right there. I don't like this because this happens. You go straight up. Quite often he comes straight back down. That's why I don't like vertical moves. Can't stand them. Try to stay away from them. That's why. But you didn't ask about that. You asked about SQ. So let's look at that. If you're involved in those momentum stocks and you're trading those vertical moves, please, you get a vertical move and it's separated from the 10-day moving average. Take your gains. Protect yourself along those lines because that's the stuff that happens. All right, so we tried to get above the recent high and couldn't do it. Closed below it. Now we're gathering ourselves. We've held this uptrend here. So we're creating just a little small ascending triangle on square. The ADX has come on, baby. Just come a little bit further. Man, I would love to see it get down to 20. You know that. So if square could just consolidate a little bit more and then maybe the ADX doesn't make it to 20. It's just my preference. They don't always do it. The stocks don't care what my preference is. I can promise you that. They couldn't care less. So I would love to see this fill in this triangle here, let that ADX come down. Then I think we make a run at blowing through that, and it could be. Let's see, this looks like this. Yeah, then there's your target, 265. So there you go. That's the target price, 265. It may not let that ADX come down. It may not care. Maybe it blows through from here, but if it gets above 244, it's going to 265. So that square looks pretty good too. You guys are picking some good ones tonight. SLV. What I think about SLV is there was a little bit of manipulation that occurred here. That's what I think happened. We're moving back up. We're going to adjust because we have this for our subscribers as well, and we're going to add to our long position here, just waiting for it to get back above the 10-day moving average. So if you're a subscriber and you're wondering why we didn't do it already, we're just waiting on that. So this was funny stuff going on in my opinion. Didn't like the interest rate spread exploding either. I covered this in the SPY update. If you haven't watched the SPY update, it was a perfect storm for gold and silver. Several factors all came together to cause them to go down. It wasn't just any one thing. So, but it's temporary. It's just a corrective move in a continued move to the upside. PLTR. eBay. I haven't looked at that one in a while. This is why we have a strangle on this for our subscribers. We had the smaller triangle. We talked about that in our insiders meeting Thursday night, and it's making a larger triangle. So it's just following through for that. It looks like it's about ready to go. Super confident that this one's going to break out. It's just going to. Don't know which way. That's why we do a strangle. $25, but it's likely going to make a pretty significant move. But it looks like maybe it's done forming the larger triangle now. So we had the false breakout to the upside, the false breakout lower. Now we're at the upper trend line again. So we've created the point. So I think we're getting ready to go here. RIOT. Man, you guys like these vertical things. So there's the big vertical move, and now we're consolidating. Didn't get too far away from its 10-day moving average, but that ADX that's in the stratosphere there. So it needs to calm down. So does Bitcoin need to calm down a little bit for these to have sustained moves and continue higher. Just a little rest. Corrected a lot yesterday, a little bounce today. Let's calm down for a few days. Rest, consolidate, then you can run. That's how stocks run. If they just keep running, they run out of steam. And then you get those big vertical corrective moves, which hurt if you're in the position. What you want is to see a run, consolidate, little backing and filling. It's okay if it comes down a little bit, back and fill a little bit, then get ready, build the energy to go higher. It just looks like with the ADX that high and the positive directional indicator way down here, this needs to fix itself. So it needs to calm down a little bit and correct. And then it probably goes up to that 35 level in the not too distant future. But for now, for me, I just couldn't do anything with this. Not with an ADX that's at 65. There's just no way. But that's just me. So I mean, you're asking for my opinions here, and that's what I'm giving you. So let's look at eBay. So this was a wave 5 to the downside here, and now the wave 4 has hit 80%. So once it hit 70%, that became a disqualified 5 wave to the downside pattern, and there you go. It became disqualified to the downside and exploded to the upside. Now it looks like it's trying to build. ADX is breaking above 25. That's what you want the positive directional indicator to look like when you have an up day. You want it to illustrate that it's moving higher as well. So it looks like we're at a little bit of resistance here. That, again, looking at the confirming indicators, when you have that kind of resistance, there's a little room in the CCI as well, which is really a good short-term indicator. Money flow is looking good. All the confirming indicators are saying that we're going to bust above those highs. So if you're aggressive and you're looking for a speculative trade, you get in now. If you're a little bit more conservative, give it a little bit of time. Let it get up to 60. Where do we close today? 56. So you give it a little bit more because there's probably going to be plenty of room for it to run if it breaks above that level. So there's your thing. Are you speculative and aggressive? You could enter now. If you're a touch more conservative, let it go a couple more dollars, let it get up to 60 with that kind of a looking DMI, and then you're ready to go. All right, it's 10:07. I know that you guys can ask symbols forever. but we do have time constraints. Thank you so much for your attention. You gave us some really good things to look at. So it's been a great session with the ones that we had to look at. And I look forward to next week when we see how those turned out. So thanks for your suggestions. Thanks for watching. Have a great week. Look forward to seeing you again next week. Take care, everybody.